Hey fellow investors and fellow stock guardians, it's Friday, February 19th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a mixed stock market yet again. The stock market indices started the last day of the week in the green. However, by the end of the day, the indices went back almost to where they started it. Broadly speaking, I could see two trends emerging. Firstly, many investors are locking their fantastic gain in 2020 by selling high-flyer tech stocks. You can see the evidence of such a trend in the negative 1.3% return of the technology sector in the last 5 days. Secondly, the overall sentiment is that the economy is on its path to recovery, the treasury yield rate is on the rise, and the stock market may not have the same go-go momentum that it once had in 2020. Evidence of that could be seen in the excitement brewing in other markets such as cryptocurrencies that are hitting new all-time high records day after day. Now let's get to the winner stock of the day. Shares of Baidu jumped more than 14% on Friday. The so-called Google of China announced its quarterly earnings report this week, and the results were strong. What's driving the stock price though seems to be the company's partnership with EV car maker Geely to supply it with intelligent chips to make smart electric cars and get them out into the market in 3 years or so. The critical part of the story is that while Baidu is known as Google of China, unlike Google, more than half of its revenue is coming from cloud and AI business segments and not from advertising. So search engine revenue is pumping cash, and Baidu invested in rapidly growing AI, EV, and cloud markets. That's quite a savvy business strategy. On the loser side, one of my favorite biotech stocks lost more than 14% today, and the drop tells me investors are moving from COVID-19 stocks as an investment strategy. Quidel, ticker QDEL, is a company that has benefited heavily from its COVID-19 testing kit development in the last year or so. In its latest quarterly earnings, the company showed 211% revenue growth compared to 2019, and almost all of that growth came from the company's COVID-19 testing kit. Despite such strong performance and profitable and cash-rich operations evident by the company's stock chart, investors are selling the stock to lock their gain and moving on to the next big thing. COVID-19 as an investment strategy has lost its appeal. Even Quidel's announcement about building a new manufacturing facility to produce its COVID-19 antigen test kit didn't mean anything to investors. You'd see the same lukewarm reaction to Pfizer and Gilead's expected revenue from the COVID-19 vaccine and treatment, as both companies' stock prices have either remained flat or dropped compared to the same time last year. As we said, investors have moved on to the next exciting and hot thing. By the way, we just picked up a new stock for our 2021 starter portfolio. Every year, we start a new starter portfolio. We have done that in 2018, 19, 20, and now the new one just got started for 2021. With these starter portfolios, we pick about 10 to 12 stocks for the year, and the goal is to give new ideas to new investors who is getting started in the stock market. Typically, we look for strong companies with lots of cash and not too much fluctuations as the foundation of a new portfolio. If you go to our stock pick page on StockCard's website, you can see all three starter portfolios have overperformed the S&P 500 index since their inception. The magic behind the overperformance is that we focus on solid companies with solid growth potential and buy and hold them through market fluctuations. That tends to be an excellent strategy for starter investors. If you are a new investor and would like to follow the 2021 starter portfolio and receive update alerts when we add a new stock to the portfolio each month, sign up for a VIP free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you next week.